Hello there, welcome. Thank you for joining us in Tuesday edition of Your Business Nigeria. Yes, it's a special edition. We'll be linking live to Abuja to get the resolution after the two-day Monetary Policy Committee meeting, which the Central Bank Governor would be explaining to us what are the modalities, fundamentals, and issues being considered at the moment before they get to a final decision. Now the CBN Governor is seated. Let's link up Abuja, and we'll be back to start some analysis afterwards.
Inflationary pressure and lockdowns in China. Other contributing factors include tightening global financial conditions, declining global trade, and increasing risks of a financial meltdown owing to the burgeoning global private and public debt portfolios. The committee reviewed these and other developments in the global and domestic economies in the third quarter of 2022, as well as the outlook for the rest of the year. All 12 members of the Monetary Policy Committee attended this meeting. The global developments. The committee expressed concern over the heightened risks of spillover associated with broadly weakening global recovery. These have been further exacerbated by uncertainties emanating from lingering supply chain bottlenecks due to Russia-Ukraine war and continued COVID-19 lockdown in China. Consequently, global trade maintained a steady decline while inflation remained unabating despite progressive rate hikes by several central banks. The risk of yet another global recession will be extremely damaging for fragile economies still confronted with the lag impact of the 2020 recession, especially for emerging markets and developing economies currently confronted with huge capital flow reversals and tightening global financial market conditions. Consequently, the IMF, International Monetary Fund, in its July 2022 growth forecast, further downgraded global output growth for 2022 and 2023 to 3.2% and 2.9% respectively, from 3.6% apiece. In the advanced economies, inflation remained high and considerably above the long-run objectives of several central banks' threshold despite progressive rate hikes, due largely to a persistent increase in the prices of food and energy. In major emerging markets and developing economies, the uptrend in inflation is expected to continue in the medium term, driven by legacy structural issues, elevated exchange rate pressures, rising capital flow reversals, in addition to the outlined shocks from the global economy. In global financial markets, investors have continued to rebalance their portfolios as yields on fixed income securities improve with the ongoing policy rate increases. Gold prices are thus gradually declining as investors move steadily towards the fixed income markets. In addition, risk-averse portfolio investors have continued with reassignment of their portfolios from perceived riskier emerging market securities to less risky advanced economy securities. Domestic developments. According to the National Bureau of Statistics, NBS, real gross domestic product grew by 3.54% year-on-year during the second quarter of 2022, compared with 3.11% in the first quarter of 2022 and 5.01% during the corresponding quarter of 2021. The economy has thus maintained continuous growth for 7 consecutive quarters, following its exit from recession in 2020. This consistent positive performance was driven largely by the sustained growth in the non-oil sector, particularly services and agricultural subsectors, supported by continued policy interventions as well as credit expansion to the private sector. While output growth remains positive, the committee was concerned about the contraction in economic activities as indicated by the Composite Purchasing Managers Index, which fell to 47.2 index points in August 2022, below the 50 index points benchmark compared with 50.4 and 51.9 index points in July and June 2022, respectively, an indication of a weakening output situation. The contraction was attributed to a decline in production levels, new orders, inventory levels, employment levels, and persisting shocks from the global economy associated with both Russia-Ukraine war and the unabating pandemic, as well as other domestic shocks. The committee, however, expressed optimism on the economy's recovery in the short to medium term in view of the unwavering support by both the monetary and fiscal authorities in Nigeria. The committee noted the continued uptrend in inflation for the 7th consecutive month, with headline inflation year-on-year rising to 20.52% in August 2022 from 19.64% in July. Both the food and core components rose to 23.12% and 17.2% in August 2022 from 20.02% and 16.26% in July 2022, respectively. The hike in energy prices, such as rising price of automatic gas or AGO, hike in electricity tariffs, as well as the perennial scarcity of premium motor spirit PMS, contributed significantly to the building of expectations, thus pushing up the cost of transportation and production. Other contributory factors include the broad-based insecurity across the country, which continue to dampen production activities generally, legacy structural factors such as inadequate state of critical infrastructure, high cost of importation of essential grains such as wheat, and increased demand for money associated with the forthcoming electoral campaign season. The ongoing monetary policy tightening by the US Fed is also putting upward pressure on local currencies across the world, with pass-through to domestic prices as investors exit these economies to seek higher yields in US dollar-denominated fixed income securities. Committee noted that broad money supply M3 grew by 11.05% in August 2022, compared with 8.66% in July. This was driven largely by the growth in net domestic assets, NDA, of 26.19% in July